Let's move on to the business news now. Stephen Carroll is here to talk us through the numbers. Morning to you, Stephen.
Hi, Hala.
I'm going to start off with the stock markets. Things look like they may be settling down.
Yeah, a little bit of good news at the start of the trading day here in Europe today. Shares bouncing back after those huge falls that we've seen so far this week. European shares hitting a 2-year low, but they are doing a little bit better at the open today. We're seeing gains across Paris, London and Frankfurt. The biggest gainer is Deutsche Bank in Frankfurt. That's up by nearly 4%. Now, Deutsche Bank's really been at the storm at the centre of the sell-off of European banks. They were down some 9.5% on Monday, so a little bit of a recovery in their shares we're seeing today. Wasn't so positive, though, over on the Asia-Pacific markets trading today. In Japan, the Nikkei closed down by 2.3%. It had been down much further than that during the trading day as well. And we've also seen falls in Sydney too. Now, trading a little bit lighter in Asia because, of course, the Chinese markets, Shanghai, Hong Kong and Korea as well, are all closed for the New Year holidays there. So lighter trading around in Asia, but not much sign of a recovery there. The other factor we're watching for you this morning is oil prices. We had a warning from the International Energy Agency on Tuesday that the glut in oil supply was set to continue. That sent the Brent crude oil index down by 7% yesterday. It's bounced back a little bit today, but oil still trading at just over $31 a barrel.
Now, Stephen, banks have been the focus of this week's market turmoil, of course. Italy's banks in particular.
That's right. Shares in the country's biggest banks have slumped by more than 30% since the start of this year. Italy's banks have been cutting costs, with lenders like UniCredit forced to cut thousands of jobs. Now, a deal with the EU to tackle so-called bad loans at Italian banks was agreed last month, but investors are still worried, as Lauren Berstecker now reports.
December 2015, hundreds of protesters demonstrate in Rome in front of one of Italy's biggest banks.
I saved up all my life for my retirement, and just like that, they tell me I've lost my money.
Thousands of Italians had just found out that 4 of the country's regional banks had gone bankrupt and that their savings were gone. A collapse that was symptomatic of a bigger problem that has been crippling the Italian economy for a decade. At the heart of the issue, the rising amount of so-called bad loans, which are now worth around 21% of the country's total GDP. Also known as non-performing loans, they represent money that borrowers are unable to repay. Overall, that's an estimated 200 billion euros that Italian banks are unlikely to get back. The situation has led to fears that Italy could become the next EU country headed for a banking crisis.
Italian banks are Europe's weak links. There are worries that Italy could spark another crisis in the Eurozone.
The European Union agreed to a deal in January that will enable the Italian government to guarantee these non-performing loans so that banks can sell them to private buyers such as hedge funds. A move that, if successful, could help restore investor confidence and speed up the country's feeble economic recovery.
Turn to Disney now. They've been awakened by the Force.
Yes, that's right. The latest Star Wars film has helped to boost Disney's profits to $2.9 billion for the last 3 months of 2015. Earnings from Disney's movie studio were up by 86%, while The Force Awakens also helped profits in its merchandise division. They rose by almost a quarter. But Disney shares fell in after-hours trading after disappointing earnings from its cable TV division. And meanwhile, the company also said that visitors' numbers at its park, a theme park I should say, near Paris, fell by 8% after the November terror attacks. The park was closed for 4 days and there was a spike too in cancellations. Revenues from the park fell by just 1%. That was thanks to an increased spend by visitors who did attend. We'll move on now to look at some more of the day's business headlines for you. The Swiss bank UBS has frozen salaries across its investment bank in reaction to the sharp fall in bank shares. The 5,200 staff affected have been told that any increases they were due will have to wait until the second quarter. It comes after UBS reported a fall in pre-tax profits for the last 3 months of 2015. And Heineken has warned of a volatile year ahead, but says it still expects to increase its earnings this year. The Dutch brewer's net profits rose by a quarter last year to almost 1.9 billion euros. Sales fell by 2% in Africa, the Middle East and Eastern Europe, but rose elsewhere, including the rest of Europe, which is its biggest market.
And finally, Stephen, Apple's chief executive being left red-faced after posting a less than perfect photo.
Poor Tim Cook. He was at the Super Bowl. He took a photo with his iPhone, posted it on Twitter, but it wasn't the best photo in the world. We'll take a look at it now. He did capture the moment, really, of that sort of euphoria of the Denver Broncos winning the Super Bowl, but it just wasn't a great photo. And unsurprisingly, he was somewhat mocked online for having posted such a photo, especially given that Apple is running a campaign called Shot on iPhone, which is supposed to post these amazing photos that you can take with an iPhone, although this obviously wasn't one of them. Somebody spotted the criticism, obviously, in his team. The photo was removed from Twitter, deleted, and a new one posted that showed a perhaps clearer picture of what was happening. I quite like the blurry one. I feel like this is what it was replaced with. I quite like the blurry one. I think it more represents the sort of photo that I would take in that situation.
Me too. That's the kind of thing I take on my iPhones. It's reassuring to
neither
know
of us are selling phones. So
it's reassuring to know that the boss of our iPhone is just as inept when it comes to photography. Thank you for that, Steve and Carol.